Welcome to Illuminati Silver. We tell the truth about silver. Today is Sunday the 11th of July 2021 and we're publishing our gold and silver weekly update for the weekend in the 9th of July and providing our forecast for the coming week. We have to advise that the contents of this video are the same as the normally weekly update we publish on a Saturday. However, we found that using different headings and thumbnails ensure that we reach more people. So if you've listened to our update published yesterday, there's no need to listen further. If not, then enjoy and hopefully give us a thumbs up and subscribe. So let's get to it. Gold rose $21 last week from $1,788 to $1,809, having hit a high of $1,818 and a low of $1,784. That represents a rise of 1.2%. In sterling terms, it finished the week at £1,301. That's up £8. And in euros, it closed at €1,522. That's up €16. Silver, however, fell 36 cents from $26.49 to $26.13, having hit a high of $26.78 and a low of $25.79, a fall of 1.4%. In sterling terms, silver closed at £18.17, that's down 37 pence, and in euros it closed at €22 exactly, and that's down 0.32 euros. The gold to silver ratio as a result obviously rose from 67.5 to 1 to 69.2 to 1. Bitcoin is down just $56 from our report of last week and currently stands at $33,390. It's been as high as $35,951 and as low as $32,152. On the issue of Bitcoin, just a quick shout out to a new channel we've set up, or in fact a channel replacing the Richard and Greg channel called Crypto Plus, where we will be speaking about cryptocurrencies, definance and alternative investments. We've already placed 3 videos on that channel and we have more to come, and we've placed a link to it below. Advancing now to equity markets, the Dow Jones closed on Friday at 34,870. That's up 448 points on the day and up 84 points on the week. The S&P 500 closed at 4,369. That's up 48 points on the day and up 17 points on the week. The Nasdaq Composite closed at 14,701, up 142 points on the day and up 62 points on the week. So clearly, had it not been for Friday's rise, the equity markets would have been down overall for the week. Brent crude closed at $75.55. That's down 62 cents. And WTI crude closed at $74.56, down 60 cents on the week. And as we reported earlier in the week, there is a dispute going on, or has been a dispute going on, about production levels with the OPEC plus countries. Now, we concluded last week's video with the following forecast, quote, "Our gold trading range for this coming week, we foresee regular trading between 1725 and 1850, with 1675 and 1875 as outliers, and silver trading between $25.25 and $26.75, with $24.75 to $28 as outliers." Well, as we can see, gold traded $34 between its high and low. That's, just as a reminder, between 1818 and 1784, ending the week closer to the upper range, having spent most of the week in positive territory. It therefore traded within the upper half, in fact, of our weekly forecast, which is encouraging for gold. Silver traded as it did last week within $1 of its high and low. In fact, to be precise, within 99 cents. That's between $26.78 and $25.79. Closing well within our forecast trading range, which was a tight range, which we gave last week, with the upper end surpassed momentarily by just 3 cents. There is no one on YouTube, or in fact any investment house that we know of, who have given such a tight forecast and proven accurate as often as we do. And yes, we are blowing our own trumpet, as yet again, even these past couple of weeks, we've seen some subscribers and viewers migrate to pump and dump channels instead of listening to what is actually happening. The truth, like life, is uncomfortable, but you're better off prepared and knowing the truth than some BS someone is telling you because they have a precious metal to sell. We're still anxiously waiting for this $100 silver and $5,000 gold we were promised by the pumpers at the start of this year. You've got just 5.5 months left. Looking firstly at gold, it's now achieved its third weekly gain, albeit with moderate rises. With the level of money printing still continuing and loose monetary policy, we should see gold strengthening further. The dilemma, though, is that Treasury yields and dollar strength are acting as headwinds. Also, regardless of what anyone says, we still remain confident that whereas the equity markets were the main beneficiary of funds that at least some part would have gone to precious metals, the recent rise in attraction or speculation, depending on the angle you're taking, of cryptocurrencies has diverted additional funds away from gold. If you bear in mind that the current crypto market capitalization stands today at $1.39 trillion, a small proportion of that going into precious metals would make a difference on their price, especially for silver. For those who doubt the veracity of our argument, only have to speak to so-called crypto warriors, and they will tell you that Bitcoin is digital gold. Now, we're not saying we agree with that, but that is their view. And they don't come up with that saying from nowhere. And it is certainly the environment into which the young are attracted. There are very few people today with trading apps looking at buying gold and silver under the age certainly of 35, if not older. That does not make them right, but it is pointing out what is happening currently. Of course, should the crypto market completely collapse, then a different proposition exists, and then gold and silver holders will become major beneficiaries. So, from a technical point of view, we have some resistance levels of gold above its current price. These rest broadly at $1,819, $1,835, which is the one we're looking at, which is where the 50-day moving average rests, and $1,854 above that. Support levels exist at 1,800, psychological really more than anything else, with more serious support at 1,788, which is the 10-day moving average, and then 1,770 and 1,750 below that, with 1,750 being seen at this moment at least as the current floor. The MACD histogram is pointing in positive territory, suggesting higher prices ahead. Looking at silver now, unlike gold, it spent most of the week in negative territory, and at one stage on Friday looked as if it was going straight down to a major support level in our view of 25.50, but fortunately halted at 25.79. The technicals show that we have resistance at the 10-day moving average of 26.13 and additional resistance psychological at 27, and at 27.05 and 06 is where the 50-day moving average lies. We have support at 25.69. This is following an upward trend line. If, of course, this is broken to the downside and held, then that trend line would be broken, and a downward sloping one could replace it, or a horizontal consolidation. Though looking at the charts, it's more likely to be downward sloping. The MACD histogram is printing in the negative territory near the zero index level with a flat trajectory, which suggests consolidation. Now, looking at economic data next. Last week, we saw weaker services PMIs published on Tuesday, higher weekly jobless claims published on Thursday. In fact, some 23,000 more claimants than expected. And we also had reducing consumer credit by $1 billion for May. Wholesale inventories reported on Friday for May were up 0.8% from a revised 36.8% level the previous month. So the economic news generally was not good. And with increasing scare stories about the new COVID-19 Delta variant rampaging the globe, we have to ask whether this recovery is sustainable or just momentary. We think it is sustainable. However, it's not going up in a straight line. This coming week we have the following economic reports coming out of the US. On Monday, nothing. On Tuesday, NFIB Small Business Index for June, and also Consumer Price Index, Core CPI, and the federal budget, all for June. Wednesday, we have the Producer Price Index for June and the Beige Book. And then on Thursday and Friday, weekly jobless claims, Import Price Index, Industrial Production, Capacity Utilization Rates, all for June, plus the Empire State Index and the Philadelphia Fed Index for July. Friday, retail sales excluding automobiles for June, and the Consumer Sentiment Index for July, and a little bit of a laggard, business inventories for May. So we have a significant amount of data being published this coming week, which should see some reactions in the marketplace for sure. Also, on the political front, President Joe Biden has signed an executive order aimed at cracking down on big tech firms and promoting competition. The order includes 72 actions and recommendations involving 10 agencies. It suggests that problems have arisen because of large tech firms collecting too much personal information, buying up potential competitors, and competing unfairly with small businesses. Of the several recommendations it set out, 3 that were included were greater scrutiny of mergers in the tech sector, new rules to be set out by the Federal Trade Commission on data collection, and barring unfair methods of competition on internet marketplaces. We shall see how this impacts further on equity markets and especially the Nasdaq this coming week. So where do we see gold and silver prices moving next week? Let's get to the crux of this video. While bearing in mind that we are to a very large extent reliant on the movement of interest rates and the US dollar value, and also now some nervousness in the equity markets, we are therefore raising our gold trading range for this coming week. So we have gold moving between $1,750 and $1,875, with $1,700 and $1,900 as outliers. We're not really expecting those outliers to be reached, really. And silver trading between $25.50 and $27, with $24.75 and $28 as outliers. If silver can maintain its current levels, then we're going to see it pushing towards that $27 level. But frankly, we're a little uncertain in view of the economic data that is coming out. What do you think? Do share your thoughts. Also, please do not forget to subscribe to Crypto Plus, where we are covering other forms of investment and finance, blockchain and cryptocurrencies. We've placed a link below. Meanwhile, thank you so much for listening. If you haven't done so, please give us a thumbs up, subscribe to the channel, and press the bell sign so you're notified of our videos as and when they're published. And we wish you a safe, enjoyable weekend. Look forward to additional videos we're going to put out, hopefully today, but certainly tomorrow, and have a most prosperous week ahead. Disclaimer. Illuminati silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.